Budget 2022 has been announced by our finance minister, Mr. Lawrence Wong, and beyond, looking at our electricity bills and falling off the chair or looking at prices of petrol. Today's video, we're going to talk about property taxes, the increased property taxes, and what does it mean for us as property investors? What do we need to know and what must we do about it? My name is Daniel. I'm the founder of Born Poor Die Rich, and we create videos like these every week to help you grow passive income through property. So if you haven't already realized by now, there is going to be an increased property tax. This property tax will impact all properties with an annual value of more than 30,000. So if you're wondering, is my property under 30,000 or above 30,000? Well, for owner occupiers, all right, meaning if you live in a property, then it would only impact you if you live in, a penthouse or a good class bungalow, or the larger the property, the more central, the more expensive, that's where it will impact you. So the short answer to that is it wouldn't impact most Singaporeans. However, there's one part of the property tax increase that a lot of Singaporeans should pay attention to, and that is the impact on non-owner occupied properties. All right. So what this simply means is if you own a property and you don't live in it and you rent it out, that's considered a non-owner occupied property, which in other words, it also means it will impact all investment properties in Singapore. So let's look at what the rate is, okay? Currently, it's, I think, between 10 to 20%. This will be increased to 11 and 27% in 2023 and raised even further to between 12 and 36% in 2024. So what the impact of this is for us as Singaporean investors is if you're already investing in Singapore, to begin with, the net yields, the rental yields on property here are 2 to 4%. In fact, the cash flow in most cases is actually negative, meaning your rent can't even cover your mortgage. And, over the next few years, the cost of property taxes, even though it's not going to be exponentially a lot, however, all these add up and eat away at the very low rental yields that properties in Singapore already generate. And while most Singaporeans don't live in good class bungalows, but a lot of us still aspire to live in one property and also to own an investment property, rent it out, collect rental income. Yes or no? Smash the like button if that is you. And who wouldn't mind collecting, 1,000, 2,000, 3,000 of rental income every month, right? However, when you look at this increase in property taxes with the latest round of cooling measures, like the increase ABSD to 17%, then this puts the dream of most Singaporeans of owning an investment property even further out of reach. All right, so that is, quite frustrating. However, there's one huge secret that I think most people don't even realize, is that the first thing you need to consider in property investing is this: know your strategy and go to where your strategy works best. Now, what do I mean by that? If your strategy is to rent out property for passive income, then go to where passive income as a strategy works best. And if you've been following our channel, if you haven't already subscribed, make sure you click on the subscribe button and click the notification bell so you're informed when videos are out. Is that in the UK, there aren't very expensive properties. All right. I mean, a lot of amateur investors rush to city centers in London or Manchester and buy new built properties. However, please don't do that because these properties often don't give very strong cash flow. Check out this other video that I did on new built versus existing properties. But on top of that, there isn't an additional buyer stamp duty. In fact, what people pay for in additional buyer stamp duty, in Singapore, if you buy a 1 million property, that's 170K. With the amount of money, we can actually buy a property in cash in some of our golden goose investing hotspots. All right. And some people think, hey, does it mean that the property dream is over? I should give up, my dreams, aspirations as a property investor. What do you think? Well, actually, if you invest in the right areas in the UK, you can start with as little capital as 50 to 100,000 Singapore dollars and get access to lending. You can still own a property that, more importantly, generates you a profit every month. So I would say the dream of a property investor is twofold. Firstly, to be able to own a property, that's one. But beyond that, you need to own a property that's making you profits every month. So type out in the comments below, what are some lessons, what are some implications that we have to take away from this budget, and what can we do as property investors to create more passive income for ourselves and our family. This is Daniel signing out.